Hey YouTube, so today we're going to be talking about something that I've spoken about a little bit before, but today I want to kind of break that down, and it's about why a strategy alone is not going to help you in trading. The silver bullet strategy, for example, the one that's going to make you profitable, or the one strategy that's going to make you $15,000 every single day, or this one strategy that made me 20% a day, whatever the fuck. We've all seen it, the one holy strategy that's going to make you a profitable trader right now. I'm here to tell you that even though some of these strategies may work, because in general, a lot of strategies do work, they're not going to be the end all be all for your trading journey. Now, let me break that down a little bit. Why not? So having a good strategy, I would say, is probably only about 20 to 30% of being a good trader. Now, the majority of these strategies that you see online, the ones that claim to have a 96% win rate, they probably do work, but only for a certain amount of time. And usually if they'll show you a period of backtesting, they'll show you maybe like a week or a month of backtesting in which to get good results. However, if you extend that onto multiple years of backtesting, you'll often notice that these people in general only have about a 50 to 60% win rate, which is still great. Don't get me wrong. I mean, it depends on your risk to reward ratio, of course, but it's still really good. The whole claim of having an absurdly high win rate is basically just to sell the consumer, the traders like you and me, into something. I've said this before, it's created unrealistic expectations for trader, thinking that they need to have a win rate of at least 90% in order to be a good trader. So don't fall for these gimmicks of 96% win rate and stuff like that. Let's say you do have a good strategy. Let's say you have a strategy. Let's say you're using a simple supply and demand or a support and resistance strategy or a moving average strategy, whatever it may be. They all work. So let's say you do have a strategy. Then what? Because a lot of people will have a good strategy, or a lot of people will sign up with a mentor who has a good strategy, but they won't end up getting the same results as them. How come they won't get the same results as their mentor? There's a couple of reasons for that. And I would say reason number one is 100% experience, for sure. Let's say you and I are going to play guitar together. It's a weird example. And I've played this song a million times on guitar, and you've only played it once or twice. Who's going to play the song better? I would assume the guy who's played it a million times. Now that's experience. He knows what he's doing because he's done it a million times before. Oftentimes, the people whose strategies you're trying to copy or trying to use, they know that strategy like the back of their hand. They know it because if you've been trading it for years, they know exactly what they're doing. They've been through all the ups and downs. And this is also highly important to remember, even they will get losing streaks with it, no matter how much experience they've got. So why is a strategy not all that you need? You need to become the person who's worthy of trading that strategy profitably. How do you do that? You've got to learn to master the strategy. Mastering a strategy comes from, I would say, multiple things. Number one, getting familiar with all the ins and outs of the strategy. So know exactly which concept you're going to be using. You're going to be using imbalances, for example. Make sure you actually know what imbalances are, and don't just Google it for like 2 minutes and then go on with the strategy, but actually study it. Know what imbalances are. Let's say you're going to use liquidity sweeps in your strategy. Know what a good liquidity sweep looks like. Let's say you're going to be using support and resistance. Know what a good support or resistance zone looks like. So make sure you understand the concepts within the strategy that you're deciding to use. Don't just blindly copy a strategy on YouTube. Make sure you understand what the strategy consists of. Now, once you do understand what your strategy consists of, and now you do understand how your strategy works, it's time to start collecting data. There's two things I want to talk about here. First off, set realistic expectations before you start collecting data, because oftentimes there's people who will test a strategy for like a week, not getting the results they were hoping for, and then switching strategies or trying to switch things within that strategy. For example, a new time frame or a higher RR or a lower RR or a new confluence, just stuff like that. So once you do understand that you can obviously not avoid losses, I mean, we all would if we could, but there's no way around losses. I would also this is also a little something I like to point out. You know what's a fun thing to do is to go and look at track records. Professional management firms or professional hedge funds, they often have these track records public because they're obviously there to be shown to investors. So go and take a look at those, and they'll really ground you instantly, because they'll show you that it's not possible to make 20R every single month just like that. So that's a good tip that I would give you. If you believe in all this nonsense where people say that you can make 50R a month if you just follow their strategy, go and look at the professionals. Go and look what the mathematicians are doing and the people who studied for years and have got 20+ years experience in this industry. Go and look at what they're doing, and you'll realize pretty quickly that it's not as simple as it seems. Okay, so once you've set your expectations back to realism, once you truly understand what trading is about, and once you kind of grounded yourself into knowing that you shouldn't aim for that 20R every single month, you can start collecting data properly. Now, how do you collect data properly? There's two methods in my opinion. One is if you're using a mentor. If you don't have a mentor, mentor, it's going to be a little bit more tricky, but there's always obviously free guidance. I mean, you can even contact us on Discord and we'll help you out. So what I would do, first of all, this is the method that I advise to most of our members too, is to go and start backtesting and just do everything you think you should be doing. So let's say you're going to start backtesting and collect a sample size of about 50 to 100 trades. Make sure you journal every single one of them and take pictures of every single one of them, and then log all of these trades down and write down what you were thinking. After you've done that, if you have a mentor, go through these trades with your mentor. That's what a mentor is for. So go and take a look at all of these trades with your mentor. And whenever we do this with our members, for example, we'll often point out the same things, which is, for example, a proper breaker structure or proper liquidity sweeps, because they'll often take, for example, a wick as a breaker structure, whereas we like to look more at body closures. That's just a little quick example, but it's just simple stuff like that. Once you've gone through some of these trades with your mentor, go back into backtesting their newfound knowledge and go and try and see if you can bump that win rate up a little bit. And then you keep doing the same thing until eventually you get to a point where you have a consistently solid edge. So why do I say that strategy is not all you need? Because whenever we're talking about a strategy, we're not talking about all the work that goes into developing that strategy for you as a trader. Every strategy has to kind of be personalized. Now, the only way to do that really is by testing it and by collecting data and then going through that data with a mentor and then evaluating and seeing what you can improve on to eventually get to a next level. The second method is essentially the same thing, but because you don't have a mentor, you're gonna have to figure it out by yourself. So let's say you notice a pattern in your losses. Let's say you're noticing that every time you're taking a loss, you're, for example, trading counter trend. Now you're basically gonna have to do the same thing as your mentor will tell you, but you're kind of gonna have to figure it out yourself, what you've been doing wrong. Now that's gonna be a lot harder for sure. It's probably gonna take a little more time too, but it's doable. I've done it before. I've done it too, so you guys could do it too. But eventually you're just gonna want to kind of do the same thing. You're gonna take a sample size, I would say in this case, about 30 to 40 trades. Otherwise it's gonna take a really, really long time because you don't have anyone to basically tell you what you've been doing wrong. So let's say about 30 to 40 trades. Every time you've done 30 to 40 trades, log them, go back, take a look at what you've been doing, and then try and see if you can point out a pattern in your losses and see if there's something you can eliminate from your trading that'll increase your win rate. Once you've done those two methods, basically, you should see a slightly higher win rate. The art in trading is to be able to stick to that strategy. And now this is where a lot of people go wrong. And this is why I also wanted to talk about the strategy is not all you need. I would say that the most important skill of a trader is probably staying disciplined and staying patient. The reason why I'm saying that these two things are really important is because it's really easy nowadays to get your discipline thrown off by something like social media. Let's say you've been doing well, you've done your back testing, you've gotten pretty good at your strategy, but you take a losing streak in the live markets and you're down 5,000 euros, $5,000, whatever. All of a sudden you're starting to doubt and you're starting to think, have I been testing wrong? Have I been making mistakes or whatever? And this is a crucial point in a trader's career, because this is the point where they'll either continue on and keep sticking with that strategy, or they'll start switching and going in circles, and they'll start buying new strategies, looking for new mentors, whatever, and basically just putting themselves through the same cycle over and over again. So you're gonna kind of want to focus on gaining that discipline. Now, how you gain that discipline is a little tricky because it's different for anyone else, but you can start, for example, by trying to work out at least 2 days a week, trying to stick to a certain diet. And for me, what helped was basically writing down the why. Why do I want to become a good trader? Why do I want to start making money off of trading? And for me, it was the freedom, and that freedom that I valued so much. Every night before I went to bed, I would just write down, I'm going to do this, I'm going to do that. Once I gain the freedom to do it, once I can drop out of school, once I can quit my job and I gain the freedom to do that, that's what I'm doing it for. And that kept me disciplined. So I basically correlated consistency and sticking to one strategy with having the freedom to be able to do what I want. Now, in order to get that, you're going to have to stay disciplined for a while, because trading is not easy. And usually when a lot of members come into our community, the first thing that I'll do is basically ground their expectations. So their expectations were to be able to make 15 to 20 R every single month, make 200 R every year. And we'll basically ground their expectations all the way back to what trading was 20, 30 years ago, before all the marketing gurus came in. And once you've got a solid base and a solid understanding and solid expectations, and you're no longer hoping to gain 20 R every single month, trading is going to become a lot easier. I promise you, once you truly understand that trading is not about trying to make as much returns as you can every single month by doing a lot of technical analysis, trading is going to become so much less stressful and so much easier. And I can almost guarantee you that you'll have a way better time trading, and you'll have more fun and less stress in it too. So to kind of summarize it, a strategy is really important. However, whenever you do get a strategy and you decide to use that strategy, make sure that you really thoroughly test that strategy, kind of personalize it a little bit, go over it with your mentor or whoever gave you that strategy, and try and see if there's things you can improve on, and give yourself the time and gain some experience before you expect to make good returns on it. For me, it took a while before I started getting getting really good returns with my strategy. I really had to get used to it. I had to get to know it like the back of my hand. And so it took a while before I started to make good returns with it. Outside of that, make sure that you're disciplined. Make sure that whatever you do, don't let yourself fall into these traps of always looking for a better strategy, always looking for a holy grail. Don't fall for these traps of trying to make 20R every single month. Trust me, if that were the case and if it was that easy, and if you could make 20R simply by watching a YouTube video, then there would be no reason for any firm to have to go through a selection process or anything, because they just look on YouTube and they try to find every single trader that claims to make 20R every single month. It's not how it works. So I hope I was able to help some of you guys out a little bit with this video. I guess I'm just trying to ground your expectations a little bit, and this is kind of me trying to tell you guys to really put in the work. It's not easy. No matter what anyone says, you can't just blindly copy a strategy. You're gonna have to test a strategy. You're gonna have to make it your own. You're gonna have to test it thoroughly. You're gonna have to have a lot of data on it, and you're gonna have to discipline yourself into sticking to that strategy. Now, most of that stuff happens outside of the charts. If you can't really discipline yourself into sticking to a certain diet or working out or showing up every day, then that's the number one issue. That's the thing you should fix first before thinking about switching strategies or even trading a strategy.